Morning traders, how's everyone doing? Okay, let's get started with today's technicals. Bearing in mind it's NFP in 2.5 hours, so just be careful. You know, with me personally, if there's a good setup and there's NFP in an hour or two, I'm still gonna take it, simply because news is just volatility. It doesn't really give you direction. So let's zoom in. So what's happening? If we zoom in into the DXY, we can see that price is yet to complete a 1, 2, and a 3. If we connect the actual trend line, there's still a chance for it to create a third tap pattern. Now, if we zoom into the 4-hour time frame, we can see it's in confluence with a nice liquidity level that I do have marked out. We should be in confluence with a stop hunt of this potential double bottom, and we could see price take out these highs as a take profit 1. Obviously long term on the DXY, based on the market structure, there is a large pattern in play. So I'll be expecting, if we don't get a reversal from a second tap second and a third tap to go long, I could expect a further stop hunt towards this third tap 1, 2, and 3 with some liquidity that I found down here. So I'll be expecting this as a plan B, and we could expect a nice large rally to the upside. But for now, what takes precedence is the current market structure. So we can see that price has depreciated from here. As you can see, the momentum, then there's a bit of a penning going on, compression, and now it's broken to the downside. So there's a big chance it's gonna want to fill this liquidity level and tap this third trend line tap. However, how many traders do you think will be taking this trade? Look, 1, 2, and 3, right? I'm expecting a rejection of this level, trigger traders to go long, and then one further stop hunt to complete the third tip of this pattern, and then we can go long. So I'm still anticipating 2 potential scenarios. However, if price does go long from here, it's fine. I'm not looking to catch the falling knife. I'd rather catch the butter knife. So if it rejects from here and it rallies with momentum, I'll just catch the pullback to some liquidity to the left, and then I'll long it. That's my plan A. Vice versa, I'm doing it on the plan B scenario. But I just need a strong rejection and a pullback with the same schematics that I trade over and over again. On the 1-hour time frame, nothing much is telling me right now, just the equal highs. This is a magnet for the DXY, and these levels of interest is also a magnet. So for now, you know, we need some momentum for NFP. We need volatility to give us direction. So next on the list is dollar CAD. Actually, no, Euro USD is the flip side of dollar CAD. So what we're expecting, again, similar scenario, we can actually see there's a large 3 tap pattern in play. As you can see, 1, 2, and a potential third tap. Now these are very common with Euro. And we can see that we did forecast a third tap from this level, 1, 2, and a third tap, and it completely dropped. But it needs to be in confluence with some liquidity, right? So what's to say it's not gonna come up here? 1, 2, and 3 in confluence with some liquidity, right? So I'm anticipating that move on the Euro USD. But that is the best case scenario. I'm also prepared that price could easily reverse from here, right? And complete the right shoulder of the Quasimodo. So we can see we've got the left shoulder here, we've got the head, and then it's just been really just compressing downwards. And now it's completing the right shoulder. I'm expecting a right shoulder, and then we can get a drop to the downside to complete the right shoulder. That's plan A on Euro USD. Same reason I have a plan A on DXY, there's plan A on Euro USD. So plan A would be to complete the right shoulder. Plan B would be a completion of the third tap pattern that we can see here, and then we can get a move to the downside. So that's the scenario on plan B. I'm definitely favoriting this scenario 1, 2 and 3, simply because it respects this pattern 1, 2 and 3. Euro USD and DXY, it does love a third type of a penning, but it needs to be in confluence with some liquidity for it to really be valid. So that's the game plan for Euro USD. So there's plan A and there's plan B. I'm not gonna catch the sniper entry here, simply because there's a nice setup just above. So if I'm waiting for a trade up here now, what happens if I miss this trade, you know, and it just completely drops on plan A? I'm gonna miss out on lots of profit. So what I tend to do is I wait for confirmation at plan A. Plan B, I'll happily catch a limit order sniper entry, but on plan A, just in case, I prefer taking this setup where it comes to my liquidity trap, strong rejection, wait for a pullback, wait for some equal highs, catch a stop one of these equal highs, look to the left for the new back level, and then I can get involved. So normally my plan A, I need confirmation, just in case it completely stops me out. And, you know, if I catch the limit order and I get triggered in and then it comes up here, I'm gonna be gutted. I've been here so many times. So I'll rather wait for confirmation at plan A. Plan B, I'll happily take the limit order and I'll sell it towards this level of liquidity. So right now, Euro USD is looking pretty promising. We just need NFP to kick in. So let's see the next on the list. Dollar CAD is actually my favorite pair right now. It's a pair I've been monitoring for a while, and it's at a very high probability area. If we go to the daily time frame, we can see to the left, so some liquidity that it's looking to fill just below this low. So that's a good confluence, especially since this was the main move that took out this high, as you can see. And since then, it's just all of this nonsense right here. Everything here, it's just a pullback to refill these orders, right? And it's perfectly in line with a 1, 2 and a third tap of the outer structure. So I'm really liking dollar CAD. It's actually my favorite pair to trade. So let's see what happens on the actual setup. So let's zoom into the daily again. This would be the third tap. What I do like about dollar CAD is the fact that right now market psychology is, this is happening right now. Look, how many traders do you think have bought it at this trend line, right? Many traders, they've now been stopped out. So that's a bonus. It's all about taking a trade when everybody's been stopped out. So they've been stopped out, cool. So how about the traders that are, for example, selling this setup? You know, they're selling it, and then they're just gonna get stopped out because this is likely to go long, right? So there's a double stop hunt in play. Also, if we separate the pattern now and we focus on what's relevant, this is very common with dollar CAD, where if we do see some extended compression, there's normally a breakout to the upside. Even, you know, it's the same schematics here, but just on a smaller scale. They're very similar schematics at the moment. So you can see almost similar. And then what happened next? It rallied to the upside. So what's likely to happen here? It's going to likely rally to the upside, but first it needs to complete the pattern and it needs to fill liquidity, right? There's some liquidity here which is in confluence with so many confluences actually. Not only do we have a 1, 2 and a 3 in confluence with the liquidity to the left, we also have 1, 2 and obviously 3. So it's a double confluence for a long. So this trade, I will happily set a limit order on. since at the maximum point of interest. There's, plan A has been invalidated, which was this level here. I never took it since it approached my point of interest with momentum. Look at the candlesticks with momentum. You can see the momentum with these candlesticks. Hold on. Lots of momentum. So I decided to cancel my order. My order was just a little bit below here somewhere on some liquidity. Normally I tend to catch the fake out of the third tap. So plan A got invalidated simply because there was lots of momentum. But now, if we zoom in, we can see that this is now a larger compression channel that's approaching this point of interest, this X right here. So I'm very interested for a long. I'm still remaining patient. I'm also prepared that if for whatever reason it just rallies, it's fine. I'll just catch the pullback to go long. But again, I'll wait for the schematic, but this is a higher probability trade. So let's see what happens. Next on the list is dollar yen. Okay, dollar yen is looking pretty interesting. This is really the point where I do want to buy it, since this is the main move that took at the previous highs, and it's a nice level of liquidity on dollar yen as plan B. This would be my long. But in terms of a sell setup, I'm actually anticipating one more stop point. So we've got momentum. Hold on. We've got momentum to the downside. We've got a nice range, some equal highs at the top. We now have a stop hunt of the bottom of the range, and now I'm expecting one more stop hunt to complete the equal high stop hunt, tap this level of liquidity and sell it towards my plan A long bias. So because there's likely to be a double stop hunt on dollar yen, it's looking like a pretty decent trade. So I've already set my limit order here, stop loss above somewhere, and this is the game plan for dollar yen. And then I'll be expecting obviously a reversal from plan A to take out these highs. This will be my take profit 1. Then plan B, depending on how price approaches my plan A, we could get a bigger time frame set up in play. The longer term bias on dollar yen, really I'm expecting it to take out these highs and tap this level of liquidity, which is in confluence with this stop hunt. So for now on dollar yen, just need to remain patient, and I really do like the tight compression. So I am expecting one more drop to the downside to either from here or further north to there. So that's the game plan on dollar yen. Okay, next on the list is euro pound. So euro pound, I'm going to walk you through why I never took this trade, which was a trade that we forecasted. So what happened, let me just delete this. What happened was, if we zoom out onto the 4-hour time frame, there was this pattern in play where I'm separating the pattern. I saw the schematic, I saw the equal lows, I saw some liquidity, I set my order, right? And I want to take this trade towards this outer bank level that's in confluence with these equal highs, right? But the reason I never took this trade was simply because if we zoom into the 1-hour time frame, what I saw was this. At the time it looked valid, right? I set my order actually approximately around here. So I was expecting my order to be triggered, stop loss below a zone. I set my order, I came back another time, the downside, then I'll leave my order on, and there's a big chance of it breaking to the upside simply because there's compression, right? However, what happened was that when I saw the setup, is approximately here actually. I saw this and I thought, how is price approaching my level? Number one, it's approaching it very impulsively, lots of momentum, as you can see. So that already put me off. And when I saw this flag, this bearish sort of pennant, you know, what's likely to happen after momentum, a flag, there's likely to be momentum to the downside and take me out. So I simply just cancel my order. I'm not going to stay in a trade and be stubborn about it, knowing there's a big chance that the next move is going to be momentum, right? So I cancelled my order, got cancelled, and then what happened next is, yes, it continued momentum, would have stopped me out by probably a pip, and it would have just continued going lower. So that was the thought process on Euro Pound and how I avoided a good little loss there. We now zoom into the 4-hour time frame. I'm now anticipating this. So this level has been breached. This has been breached. I'm now. And now we can see something completely different. There's now a larger pattern in play. So what I'm expecting on Euro Pound is two things. One, a retest to this level of liquidity and a long to take out these highs to complete a 1, 2 and a third tap. So that's my plan A. Again, I'll be waiting for some schematics to take my plan A, simply because there's a setup just below at plan B, right? Because this could easily take out this low here, have a small rejection. So one stop hunt, a rejection where it's going to trick retail traders to take the double bottom, then one more stop hunt towards one of these levels of liquidity, and then a long. And then if this happens, it'll just form, you know, a larger pattern, a larger channel now. So I'm still just waiting, I'm still being patient, but I need to wait for my schematics to give me the green light. Without my schematics, and if I'm just taking limit orders at plan A, initially I'm driving the steering wheel with the wrong direction. So I need further confirmation. So I got plan A, where I'll be waiting for a schematic to enter my trade, and then plan B, I need my schematic of the equal lows rejection, and then I can set the order or some compression. So we'll see what happens on Euro Pound. Okay, next on the list is Kiwi. Okay, Kiwi, we forecasted this setup now. We can see there's a bit of a head and shoulder in play. So 1, 2, 3, and normally after right shoulder there's a pullback and a stop hunt of the right shoulder, right? We now have some compression, and we forecasted a rejection of this level to go short, right? But now, did I take this? You know, I could have easily taken this and have my trade somewhere like this or like this. You know, it really depends, and then take profit down here. But I'm not interested, simply because, you know, there's other potential good setups. And if we zoom into the 1 hour time frame, it's rejected my level. How can I explain it? It's just rejected my level. I want to see a rejection, something like this. You know, I want to see some impulsive behavior, especially when it hasn't completed a 1, 2 and the third tap. I don't like taking trades in the middle unless it's somewhere around here on the side, which is in confluence with the trend line, right? So I decided not to take the trade, even though the forecast was pinpoint accurate, but I'm not really interested, especially with I'm expecting a spike on DXY and a stop hunt. So I think this is a trap. Wait, wrong one. This is a trap. It's likely now to go long and complete a 1, 2, 3 and then go short. We can just connect the trend line. Here we go. This level's much interesting, especially because there's some equal highs just above it. So there's some equal highs here. There's no equal highs here. It's just liquidity, right? my schematic is I need to wait for equal highs. And there's no equal highs here, but I did forecast this the sniper entry, but I'm not really interested. Don't really care about catching snipers. I care about following my rules, which is equal highs and liquidity just above. I've got, you know, plan A here and plan B just a little bit above. So I'm expecting a rally to the upside. Now, with that being said, if I was correct originally and it just completely drops, it's not the end of the world, is it? I'm just waiting for a pullback. Nice compression, wait for some equal highs. Look for a stop hunt. This is the equal highs. Look for a stop hunt. Look for the new liquidity to the left, and then I can get involved on a short. It's fine. It's not the end of the world if I miss the sniper entry. There's always going to be a pullback. So that's it for Kiwi. Just need to remain patient. Next on the list is pound yen. Okay, with this trade, again, I never took it. Same explanation with Kiwi, you know, I never took it. I decided to just cancel the order simply because, again, I'm expecting a spike on NFP and it's in the middle. If this setup, however, was approximately, if this particular schematic was up here now, I'll be taking a trade. But when it's too in the middle, it just decreases the probability. So I can always forecast the sniper entries, but I'm not interested simply because there's a big chance for me getting stopped out, because I've been there so many times where I catch these trades, you know, I'm in profit, and then it just completely reverses and takes me out on break even or whatever. So I'm not interested in that. So for now on pound yen, I'm expecting further, just one more stop hunt. What I do like about it is this move, this move, this move, this move. We've got the equal highs there. We've got a stop hunt just above it. And if we can get one more stop hunt completely eliminate everyone, then, you know, it will be a higher probability trade. But for now, I'll rather wait for further confirmation on this scenario, which is momentum to the downside, take out some lows, and then I can get involved on some compression or some equal highs, stop hunt, and then a continuation to the downside. So that was another reason I wasn't really interested, was simply because, you know, okay, the schematic was valid, however, it was still making higher lows. You know, I'm not a fan of that. Normally now, if we've got some equal highs, and if we manage to break this low here, then I'll definitely set my order up here. Because I know the trend has reversed. It's done one stop hunt to the downside, and I'm catching a second stop hunt on the upside. That's when the trade becomes high probability. But when there's only one stop hunt and it's still making higher lows, the probability decreases. It's all about trading with probabilities that has a high probability, which increases the strike rate. So I've learned my lesson too many times. So now I'm very disciplined when it comes to my entries and my rules. So this is the main reason why I cancelled my order, because it never breached the previous low. So I'm expecting either a rally to the upside and a decline, or momentum and a pullback. So that's it for pound yen. Cable, again, something similar. Didn't really set this trade simply because it was in the middle of no man's land. Didn't even set the order, I just had it forecasted, but I'm not really interested in it simply because it's in the middle. I don't like taking trades in the middle. If this setup here is up here, then hell yes, I'm going to take it, because there's 1, 2, and then we've got it here. But when it's in the middle, you know, it can be valid, it's fine, but most of the time, from my experience, it's not. So there's going to be good setups here, trick traders, and then all of a sudden, boom, stop hunt, and it completes the pattern, and it completes this liquidity level here. The reason this level here is important, simply because, number one, we've got liquidity here, right? We've got the equal highs, boom. It got filled. What's important now is this. It dropped, pulled back, and it made a new low. This is the key right here. It made a new low. So now that it's made a new low, everything in the middle is just a big complex pullback, right? Now we've got the stop hunt. We've completed the low breach, but now this is the retest of this liquidity. So this bank level 1 got filled. Now just a little bit below is plan B, sorry, the retest of the new bank level, which is why this for me is a high probability trade. So I'm expecting a sell-off approximately just a little bit higher. This is just going to trick traders on the wrong side. So I'm not really interested in that setup. And also, this is also a bit of a trap for retail. I'm pretty sure traders will be taking a sell on a 1, 2. It looks valid. Yeah, it does look valid. It looks like a valid pattern, but although it can definitely play out, based on what I just mentioned, because of smart money concepts, there's a high chance of this 1, 2, 3 being invalidated, and just doing a stop hunt and then closing back inside the channel, get the retest and a continuation to the downside to take out these lows. So you always need to think very contrarian. What is everyone doing? You know, how many traders are taking this third tap of the pattern? Many traders, right? If many traders are taking it, that means most of them are going to have a stop loss hit. So this for me is invalid simply because of the schematics I mentioned just a minute ago. So we've got the equal highs, we've got the liquidity, lower low has been filled, 1 stop hunt, lower low, and a third tap of this outer structure, and this unfilled liquidity up here. There's lots of liquidity just a little bit above. I think that you can see on this 1 hour time frame. Just up here. Just above the spike, there's some liquidity just a little bit above. So I'm expecting a magnet towards this level as a plan A. And I'm also prepared that, you know, if this, once this does go up, it could, you know, catch the pullback, and then a continuation with a nice tight stop, simply because it can still go a little bit higher and then drop. So I'm going to wait for my schematics, wait for a rejection. I'm only setting a limit order if I see some equal highs here. If I don't see any equal highs, I need to wait for a rejection. So that's the game plan on cable and all the other pairs. Hopefully you guys enjoyed today's live stream. I'll see you guys next week. Take care, everyone. Bye-bye.